2024 began with debates over a soft versus hard landing, as the Fed attempted to stabilize the economy, as well as over the sustainability of last year's market rally. Only 3 months later, those concerns have given way to a calmer environment centered around fading inflation and the Fed's plans for reducing interest rates. Unemployment is still under 4%, despite layoffs in the tech sector. Interest rates have been more stable with the 10-year Treasury yield around 4.2%, and stock market returns have broadened beyond artificial intelligence stocks. Steady economic growth has driven markets to new all-time highs. The S&P has achieved 20 new all-time highs so far this year, despite the brief market pullback during the first 2 weeks of the year. Taking a long-term perspective allows investors to benefit from these market trends without constantly worrying about when a pullback might occur. Markets have rallied through both Democratic and Republican presidencies. History shows that markets can perform well under both Democrats and Republicans. As the accompanying chart shows, the economy and stock market have grown over decades, regardless of who was in the White House. What mattered more across these periods were the ups and downs of the business cycle. Thus, it's important to focus less on day-to-day election poll results and more on the long-term economic and market trends. The Fed is expected to cut rates as inflation stabilizes. The equal-weight S&P 500, an alternative to the standard market cap-weighted index, hit a new all-time high in early March, a sign that a wider range of stocks is performing well. The positive economic outlook and the possibility of rate cuts have boosted optimism across many parts of the market. Given this backdrop, the Fed is expected to cut rates later this year, although the timing remains uncertain. The accompanying chart shows the possible path of the federal funds rate based on the Fed's latest projections, including 3 cuts this year. The bottom line? With markets near all-time highs, a presidential election approaching, and Fed rate cuts expected to begin later this year, investors should stick to their financial plans while staying invested in the second quarter of the year. History shows that this is still the best way to achieve long-term financial goals. Thank you for listening. For additional information, please visit MRAadvisory.com.